All right, so I'm going to talk about stocks versus real estate and why I think real estate is a premium investment. I think is a little better. While I think both are options that you need to have in a balanced portfolio, I think real estate is the foundation of a more balanced portfolio that's going to build wealth for yourself, your family, and whomever, you know. So the first few things I'm going to talk about are control, taxes, returns, liquidity, leverage, management, and I also might talk about versus, volatility, right? So with control, you are trusting people in a stock situation. For stocks, you're trusting people who are not people you know. You have no affiliation with these people, and you're trusting them to steward your investment towards a good future. And that's your retirement, that's your income. With stocks, it is not, you don't have an understanding of the industry that you're in most of the time. So with real estate, you have control and you create your own strategy and can predict returns with an added benefit of the real estate has appreciation. Does that make sense? So with real estate, there's more control because you can negotiate the deal, you can walk away, you can say, you can do forced appreciation. Forced appreciation is something where you just make additions or renovations to the property that increase the value when you have an appraisal and refinance or take your money out or sell. So that is the benefit of control, is that you are in the driver's seat, right? The second thing is taxes, right? So stocks enjoy more favorable long-term capital gains tax treatment, whereas real estate is taxed at the full marginal tax rate whenever you transfer the property or something like that. So real estate does allow you to write off depreciation, which is a benefit, which can help with your taxes. Okay. Now I'm not going to dive deep into taxes because I'm not I'm not a tax person. So I'm not a tax attorney, tax man, whatever. So your returns vary in both stocks and real estate across asset classes. So the right stock picks can skyrocket your net worth. If you would have invested in Apple in the 80s, I'm sure it would be worth tons of money now. If you would have invested in Amazon in the early 90s, I'm sure you'd be a gazillionaire by now. But conversely, if you were to invest in real estate and you had started buying real estate in the 90s, 20 years ago, let's say, for example, in Washington, D.C., then your investment of $100,000 could be worth well over $600,000, $700,000, $800,000 today. And that's just because of appreciation that you experience in certain major cities and certain markets. Now, real estate is something where your strategy can also lead to a high quality, profitable portfolio because of your strategy. So let's say you have a strategy, it's conservative, it's focused on cash return, it's focused on internal rate of return versus appreciation. Some people buy and speculate real estate, which I don't recommend. So if you do the appreciation approach, what you'll find is that if you do the cash on cash return approach, you'll find that you're building a nest egg. Every single month you're going to get paid. And there are also different strategies where there's government programs, there's, rooming houses, there's so many Airbnbs, vacation rentals, there's so many different avenues for real estate to diversify your income so that you can have greater returns than if you had managed a less active investment, which I think are stocks, mutual funds, Vanguard funds, S&P 500. Real estate has better returns, but they are a more active investment that require you to have a better understanding of what's going on in your market and what's going on with a property. Does that make sense? Okay. So liquidity, stocks, this is easy for me. Stocks are more liquid, period, because there's a more perfect market that exists. It's more of a commodity than real estate. Every property that is real estate is unique. It has a unique aspect to it. So this property is not the same as another property. It's not the same as this property. Every single property is different as far as location, the style of the home, the build of the home, the square footage, the lot size. Land is not uniform. So you cannot, unless you're investing in a REIT or something of that nature, you cannot standardize real estate. It's just not possible. So that's a benefit and a disadvantage to the liquidity. It makes, to real estate, it makes it less liquid. Okay. So the largest advantage to real estate, and the reason why I believe real estate is the best investment, is because of leverage. You are able to raise money or put a mortgage on a home in order to receive a greater return on your initial outlay of cash, right? Your initial capital investment. So with that being said, you can also open a margin account with stocks, but that's not usually recommended, especially because of the lack of control that you have over the investment and the lack of information that you have about what's going on in that company. So with that, I really think, leverage comes in for real estate. It's more readily available if you have good credit or, good background. So that's with that. Now, management. Stocks is hands off, period. You don't have to worry about it. After you purchase the stock, what do you have to do? Zero. All you have to do is sit back, relax, collect your dividends, which are low compared to real estate rent checks, when you compare the side-by-side investment. And it's also determined by arbitrary, whatever the people at the company want to issue you, that's what you're going to get. So, but with real estate, you're able to determine what your rental rate will be ahead of time when you purchase the property. Money's made in real estate when you buy, not when you sell, not when you rent. You always have to buy right. And so real estate is a more active investment as far as management, and it always will be. So when you're managing a property, even if you have a property manager that takes your 5, 10, 15, 5 to 10%, depending on if it's commercial or residential, you are going to still have to manage things like, it needs new roof, it needs new siding, there's a problem in the house and the property manager calls you, maybe there's some litigation that opens up, maybe you have an issue with a tenant not paying rent, or you have to do an eviction. So it's more active. Now, you do factor those costs in when you purchase. So you might factor in 30 to 35% of your rent is going to go towards expenses, maybe 40%. So you can say a $1,600 a month property will bring you $1,000 a month, something like that, right? So $1,600 a month is the rent. It may bring in net $1,000. That's just an example, right? So that really influences how you buy. And I can talk about that in a later video, but that's basically it. You want to have control. So in real estate, you want to have the control. You decide what you're buying. You decide what direction the real estate's going. You do forced appreciation, so on and so forth. Taxes, you can depreciate your asset. And even though there are less favorable cap gains on your asset, you can do returns. Real estate traditionally is going to have greater returns than a mutual fund, S&P 500, or even a Vanguard fund. Liquidity. Stocks are more liquid. Advantage stocks, okay? Leverage. Advantage real estate. You can leverage your property to get mortgages, loans, gap funding, all sorts of things, really. And management. Stocks have more management. Real estate has more management. Strike that. Don't even think about that. Real estate has more management. Stocks are more passive investments. And that's the gist of stocks versus real estate. Those are my thoughts. Like, comment, subscribe, whatever. Ask me any questions. I want your 2 cents. I want to know what your thoughts are as far as what do you think is aspects of a balanced portfolio. And I think I'm going to add this in, as a post sanctum. As far as the cost of real estate. A lot of people think access to real estate is out of their reach. It costs more to have access, right, than in the stock market. But if you're looking to create wealth you have to build that foundation. If you're looking to create wealth, let's say I invest $100 or $1,000 in stocks a month versus $1,000 to save for a down payment for a property. The better investment is going to be saving that money for a down payment on a property, because you can then leverage that money to purchase a property and utilize those funds to create a passive stream of income through rentals, versus in stocks, you'll get a dividends check, you'll see the growth of the stock price, and maybe you sell after a certain period of time. But really, you're not going to see the benefit of investing in that stock until you sell, until the company grows. And that can be, and there's the least correlation now in the market between the least correlation in the market ever between revenue, profit, and earnings, and the cost of the stock, which creates a market which is extremely volatile and is not beneficial to an investor that's looking for a long-term return. Now, if you want to play the stock market and day trade, which, if that's your profession, more power to you. But if not, it's not something that is going to beat out real estate if you're gonna save money. And that's my 2 cents. That's everything. Peace.